Credit score and real estate experience are the most important things with financing terms and rates.
What's up, guys? Today we have special guest Tamberyne McCutcheon. She's a local girl from Kauai who has closed over $500 million in loans in the past 5 years. Welcome to the show, Tam.
Thank you.
Tam, so like you're a local girl, born and raised on Kauai, but you're like also like a loan officer for a company that we use, Conventus, a hard money lender. But we want to jump into the meat. Every so often, an investor doesn't do a good job and their project goes into foreclosure. You guys actually ended up having to foreclose on some of these investors. You recently said like you had a small story like this. Let's jump into it and tell us about it.
Yeah, so what happened was we originally originated a loan that was with another lender, or actually another loan officer.
Okay.
And
so this is with your company Conventus, right? So
yeah.
The way hard money works is like we want to fix and flip a house. We'll take out a loan from you guys. We'll flip it. We'll sell the house. Then we pay you back.
Yeah.
But then sometimes, let's say something goes wrong, like the project takes longer, we can't get permits, whatever. And then now the house is going into foreclosure because the investor doesn't have enough money or funds to finish the project. So unfortunately, the hard money lender has to foreclose on the investor, take the property back. And now he or she has a foreclosure on their record.
Yes. And so I represented actually the buyer who was trying to avoid or buy a property that Conventus was trying to avoid a foreclosure. Okay. So we own the property from a previous investor who wasn't able to make his rehab work. And then I represented the buyer to buy our property back from Conventus because he looked at it as a great project that he wanted to start on.
Because, I mean, sometimes like when a project starts, maybe the investor doesn't have an experience or has like the know-how. It's like they start halfway through, but when they can't take it to the finish line, do you know like what does that process look like from a lender standpoint?
So a lot of times when people don't complete their projects, they run into issues that they don't know how to handle. Okay. Or bad contractors that they weren't able to finish the job with, and they weren't able to find another contractor to help them. And, you know, time is of an essence with these types of loans. So, those are the big, huge things that happen. And so what will happen is Conventus will come in and actually foreclose on the property. So once it forecloses, it goes to auction. And then that's when you do your in-person or online auctioning for the property.
So sometimes, like, let's say like a house, like an investor wasn't able to perform. And so whether it's bad contractors, whether it's like mismanagement, or whether maybe like whatever happens, then like when you guys are foreclosing on it, like how long does that take? And do you like give the investor an opportunity to like what is kind of the options for the investor, you know?
So usually it's a very quick process. I mean, we definitely try to get that over to a trustee as soon as possible to foreclose. So you're looking at like 30 to 60 days.
Oh, really that fast?
Yes. I feel like hard money lenders definitely foreclose quicker on traditional lenders that you're dealing with primary residents and so forth.
Because I think like a lot of like we actually work with a lot of properties in foreclosure. A lot of times they've been in foreclosure for like 2 years or like 6 months. But I guess as a hard money lender, you guys kind of don't play around then.
No. Yeah. The terms are short. The money is very expensive, you know, for us to use capital on. So the process is very quick. I mean, you're looking at maybe a 30, 60, 90-day period versus years.
Yeah. So typically, like as a hard money lender, what do you guys typically lend, like their interest rates and points and like length of terms? What does that look like?
So they definitely vary. I mean, from new investors to experienced investors, I can definitely say with experienced investors, you're looking at with a decent credit score. Obviously, everything's based off of credit score as well.
Your credit score actually matters to hard money lenders.
Yes, credit score and real estate experience are the most important things with financing terms and rates.
It's always interesting because as we're borrowers, we borrow a lot of money for hard money lenders, but it's always interesting to see the hard money lender's perspective, right? So like, because you guys look at us a different way, like how trustworthy or how sure is my bet on this loan going to be on this person? So credit score and experience are important for you guys. Is there anything else you guys look at?
We look at the property details. So the address of the property will matter. Where is this house located? And then what type of project are we looking at? Is it an extreme fixer or is it just kind of a cosmetic rehab? Those are important to us because we want to know how you're getting your ARV or your after repair value.
Got it. So going back to the story where this investor was getting foreclosed on. So do you know what happened with like the project? Was it?
We funded it. Okay. So it avoided foreclosure.
No, so the original guy that got foreclosed on, do you know what happened with his project?
I don't know what happened with his project, but it would be interesting to know what happened actually.
Because then is your colleague, right? One of their projects. Because then as a loan officer, is it kind of your job to make sure that the projects you take out loans on are good deals?
Yes. As the loan officer, we want to make sure that everybody wins. So in a sense, we want to make sure that we're lending to borrowers that are going to be good partners. We look at everything as a partnership.
Okay.
We want to see you win with your project. We want to win on our end as well. So in retrospect, as a lender, if you are a great borrower, then that will that's loyalty for us, and that would look better for a partnership moving forward.
So when the borrower went into foreclosure, we don't know what happened in that particular deal. But then what does the process look like to buy it on your side?
It's really actually the same type of loan that you would do if it was anyone else. I think it's a lot easier because we already know the property itself. And so when my borrower went ahead and put in this offer and moved forward with this loan, he was an experienced investor that made it easier. Someone that we've worked with on other loans. So he basically went ahead and the one thing about this project is it hadn't really started yet. It was just gutted. So there was not much going on. There wasn't a lot of things that needed to be corrected, I should say.
What the original purchase price and what was for?
I cannot remember.
Okay.
I cannot remember.
I mean, I'm just curious because it seems like if you guys have other projects that are in foreclosure, we would like to be in line to or have I think opportunities to buy some of them, right? So just curious what that process looks like,
Yeah, definitely. I mean, it would we get a lot of our inventory back, and our capital teams usually go ahead and sort through them before they move into the foreclosure area. And I feel like there should be some kind of list to kind of market these to our investors.
Because I mean, we would be the perfect buyer for it, right? We'll take over a project half started. We'll quote unquote rescue it, right?
Yes.
Might get like a small discount or whatever it is at the numbers that make sense for us. But I feel like as a hard money lender, you guys must have other projects, and especially depending on the market. So when the market's going good, everybody's winning, like you can do no wrong. But let's say the market is turning like how it is now, or interest rates are higher. Now when projects are sitting or struggling, then like as opposed to foreclosing, maybe you guys can just hey, look, here's a list of investors who we can market our about to foreclose projects on and see if anybody wants to take it on or something,
Oh yeah, no, that's a great idea. I need to ask about that.
Just curious, because I mean, we're always looking for deals.
Yeah.
If you and then real estate is always about solving problems, right? So if you guys have a problem that we can solve, we like to solve it. If you guys also have, and the same way goes with you guys. If you guys ever have properties you want to just help or take a look at, even pro bono, say, hey, we have an investor who's struggling. Daniel, can you come give them advice? We'd love to just be a partner with you as well too on that.
Oh yeah, absolutely.
No, I mean that's cool. Just having it's always just good talking with our vendors or people who are servicing us, because it's helpful to see your perspective and what's important to you or what you guys are looking at, because now we can become better borrowers. And if you're say a first time investor and you're trying to borrow money, you want to know what does the lens of the lender look like,
Yeah. Well, and I think in retrospect as well, if we are re-lending to experienced borrowers that work with us, we already know what their payment history is like, what kind of projects they have done in the past and what their experience is. So I feel like that would be a great partnership to kind of pass it off to, or, at least alert you of something that,
I mean, it may not work, but then just give us an option. So, But so if you're a brand new investor or a brand new borrower, what can they do to make themselves look good or to want to borrow on a property from you guys?
So we go off of real estate experience, which mainly means how many properties are titled under your name. And this is anything but a primary residence.
Okay.
And so if you don't have any other properties and you are a brand new investor, what could help is if you've had construction experience in the past, if you've remodeled homes before, that can definitely help you with some kind of credibility towards getting a loan.
So I mean, this is really good because any information the borrower can give you to kind of go to bat for them is like helpful. It's like, because like if they don't give you the information, you don't know anything about them. But like, hey, I partner on this, or like I've remodeled my own house, or I've done like I watched a lot of YouTube videos or whatever it is that they feel like they're qualified for. I took a course, I'm part of a mentorship, whatever it is. The more ammo that they can give you as the loan originator, the more that you can like kind of vet their experience or like their safety level, if that makes sense.
And I feel like if they're involved in some kind of mentorship program, it helps as well, because what it tells us is that they're being led in a good direction with someone that already has experience, and you're not just going off into the world trying to flip properties by yourself, brand new. So you kind of have that guidance from a mentor. So I think that mentioning that kind of stuff definitely helps get you the terms that the better terms.
I've never heard. I mean, no one's ever said that to me before as a lender. They just like, here's a sheet you fill out.
Yeah.
Like, don't like. I mean, like there's not a whole lot of human interaction, right? But I think you're very hands on with a lot of your lenders.
Yes.
I mean, borrowers. And so I think the more that the information that they can give you, the more that you're able to kind of personalize or kind of go to bat for that particular borrower.
Yes. My job is to make everyone happy. And so, I mean, we want the loan, we want the loyalty, we want your business. But at the same time, I need to be able to sell what we have in front of us. So the more information I know, I can kind of present it to my team and say, okay, this person is working with one of our current investors, and they're going through their mentorship program. So they are being overlooked by this person. And I feel like that does definitely win some points with us.
Yeah, that's very, very interesting. I mean, I think that there's a big thing to be said about the human interaction or like your actual point of contact for your loan. And even for us, I mean, when we're talking with either like the conventional side or even like talking with like loan officers or even like let's say Bank of Hawaii or Central Pacific Bank, these guys where like one banker or one loan officer would tell me one thing, like we can't do this. I'll talk to another banker the same day and they was like, we absolutely can do this. And so just having the right team member in place and like knowing the product and like what you can and cannot play with is really, really vital, I think,
Absolutely. I think that in my job, especially, is to really know the project and who the borrower is. The more information I can provide, the better. And with hard money, it's a lot more flexible than it is with traditional lending. So, like I said, it goes back to experience and credit score, and that's all we pretty much go off of, because we don't go off of your DTI, we don't go off of your income. The only thing we go off is who you are, what you've done in the past, and what your credit score is. And so the more things that I can utilize to make it easier for you to get a loan with us, then it makes it easier for me too.
So let's look at a real world example. Let's say there's a house in Hawaii I'm gonna buy for $500. I have to put $200,000 into it. I'm gonna sell it for like $1 million, right? So like it's very simple numbers: 500 purchase, 200 renovation, sell for $1 million. Realtor fees would be at $50,000. So we're looking at holding costs, let's say for like a year, so maybe like 100,000, and we'll make 150,000. So I mean, like I know there's like kind of a lot of numbers on there, but 500 purchase, 200 renovation, $1 million ARV. What kind of like loan could I get on this?
So based on experience, are we talking like a brand new?
Let's say a brand new investor.
Okay, so with a brand new investor, there are other things that will take into place, like where the house is located and what kind of rehab will be done. But if it's a simple like cosmetic rehab, we're probably looking at, and the credit score is definitely 700 and above.
Well, 200 will be like a little bit more than cosmetic. So it's a little like medium renovation, let's say.
Okay, so moderate, maybe moving one wall or two walls or something like that. Yeah. Okay, not structural or anything where we're adding square footage.
Does that make a difference when it's
it does?
Structure? Yeah. So if it's structural versus like cosmetic, what does that like? How does that affect the loan?
So it will affect the loan in terms of maybe rate, because it is a little bit more of a riskier project versus just a quick,
So you actually affect the rates actually affected by the type of project that is, not just the borrower.
Yes.
So just hypothetical scenario, right? Let's say I'm like, hey, Tam, this is just going to be cosmetic. Then I'd get a better rate than like, hey, Tam, this is going to be like a full gut.
Well, for you, I don't know. I probably would fight for the regular rate, but with other projects, yeah. If you're telling me that it's an 800 square foot house, we're going to add 1,200 square foot onto it. It would categorize it more of as a mid-construction, new construction type of deal, rather than a cosmetic rehab. So yeah, definitely adding square footage puts it in a different category.
So I mean, like just quick, let's say going back to our deal, let's say if it was cosmetic, what kind of rate would we be looking at? And if it was like full like renovation, what kind of rate difference would that be?
So in a perfect world, credit score is above 700. We're looking at a brand new borrower.
So is 700 kind of like everything over 700 is the same thing?
Yes.
Okay. So if
well,
750,
no,
800,
not necessarily.
Okay.
So anything over 700 is ideal.
Okay.
Anything over 750 is awesome.
Okay, so you get a little extra bonus for over 750?
Yes.
Okay.
Yes. So you're probably looking at about a rate of about, with today's rate, give or take, about 10.99 to 11.25.
Okay.
And we
that's a monthly interest rate, right?
That's the monthly interest rate, yeah. And it's a 12-month term loan, no prepayment penalty, and then you're probably looking at about a point.
Okay.
Yeah.
Okay. When you say a point, can you explain what a point is?
Absolutely. A point is 1% of the total loan amount.
Okay. So the total loan amount was, let's say, $700,000 to cover everything. 1 point would be $7,000.
Yes.
Okay. Is there any other fees that's involved besides like that?
Small fees, yes. So if you're borrowing the rehab with us, there's going to be a setup fee, which is usually about $650. And
$650.
$650. Okay. Yeah, it's a one-time fee that basically gets you into an online portal so that you can do your draws and so forth. And then there is a processing fee. I usually discount my processing fees down though. Typically it's $1,500, but just let you know that you saw it on this podcast. And then so there's a processing fee, your rehab setup fee, and then your origination fee, which is the point.
Okay. And then so like, well, let's say they're taking on a loan for this project. Let's say they say it's just cosmetic, $200,000, right? We're moving nothing too crazy. So like, let's say they get like 11% like at 1 point plus whatever fees. How big of a loan can they get at that point?
We don't really have we go up to like 2 mil.
Okay.
So we don't really have a gauge on how much you can borrow up to. To us, as long as the project makes sense and the equity is there, then it's as long as it's a good deal, we'll figure it out.
But so like that, so the ARV is 1 million, 500 purchase and 200 renovation.
Got it.
Can I borrow $700,000?
So we would be probably looking, if they're a new investor, about 80% of the purchase price.
Okay, so the purchase is 500.
Yep.
80% would be $400,000.
Yeah.
Okay.
And then 100% of the rehab.
So 200,000. So when let's say in this particular case, 80% of 500 is 400. The renovation is 200.
Yep.
So 400 plus 200 is a $600,000 loan.
Yes.
Okay. Is there any restriction on like compared to like the ARV or anything on those lines? So
for new borrowers, we want it to be a max of 65% LTARV.
Okay, so LTARV, can you explain what LTARV is?
LTARV is the ARV after the loan amount. So what we always use is the purchase price, the rehab amount, and the aftermarket, the after repair value. Okay. So the LTARV is the percentage between the purchase price with the rehab and the ARV. Got
it. So it's like basically like the total loan amount can't exceed 65% of the total end value. Like
yes.
If that's like your normal number. And so if you're an experienced borrower, does that go up or how does that work?
Yes. Okay. So if you're an experienced borrower, we can go all the way up to 75%.
Okay. So that's a big difference, 65 to 75% depending on your experience.
Yeah.
And all of this, so who determines the experience? Like who's the one like making those calls?
That's our credit team.
Okay.
And it's always changing too. So it's for the most part it's been pretty fluent with our ratios and stuff like that. But if for some reason we get a new product in or a new investor that we're using to fund our capital and so forth, then that changes. Because I think when I first started, our max was 70% LTARV.
It's just like flat, like but now it's 75 because you guys have different products that are available to you guys.
Yeah.
And so how are you guys actually, do you guys have like a big bank of money, like cash? Like how are you guys actually funding all of these deals?
I feel like well, with most people, with what they're doing with other funds is gathering a whole bunch of funds and pooling it into one.
Okay.
Yeah.
So basically, it's like you reach out to basically either Wall Street or a bunch of rich people and say, hey, you guys, we're going to like pull all your funds together and we're going to lend it out to investors. Would you guys like to be a part of this?
Yes.
And some of them are like, yes, no. And like maybe like you guys, what do you guys borrow the money at from there? And then like, cause like there's an arbitrage between what you borrowed and what you lended at, right?
Yes.
Do you know what that
I don't know what that breakdown is. I wish.
Because I'm just curious because like there's an actual percentage of like profit there.
Yeah.
There's also like the risk. Like let's say you have to foreclose something, right? Then who eats that cost? Is it you guys or is it your investors?
It's us.
Okay.
Yeah.
So that's where you have to make the difference because if you guys give out too many bad loans, it's coming and does it come out of like let's say you originate a bad loan? Do you get like your commission cut or like taken?
Thankfully, I haven't been in that situation before, so I don't know, but it would suck if it did.
Yeah. Because I mean, like if you get paid a commission and then after that, then they would take it back because you originated or some penalties. I don't know. Just curious how that works, you know?
Yeah. No, from my understanding, it doesn't come out of your commission, but maybe if you're lending to too many people that have
foreclosed on,
I could only imagine it's probably coming out of your pocket at that point.
Very interesting. So I mean, this is really interesting to see like the whole process of like how it works. I know a lot of times in like the conventional banking industry, like a Bank of Hawaii or Central Pacific Bank, they'll originate a loan and then they'll sell the loan on the back end to like another buyer. Do you guys do the same thing on your guys' side?
We do. We do try to. So we try to make sure we have enough capital to do more loans. And the more capital we have, obviously, the more new loans we can originate.
Yeah.
So how much of that they sell, I don't know.
Okay.
But they pass it off to a different servicer.
Mm-hmm. So if you're like a let's say a new investor, what kind of tips can you give from like the loan side as far as being able to fund? Like what kind of like timelines can you expect, or what makes us like a good the borrower in your eyes? You know.
A good borrower, good credit.
Okay. Is it really that important?
It is, because your credit speaks on how you pay your bills. I mean, I feel like credit is used in every aspect, whether you buy a car, whether you buy a regular primary residence. And I definitely think it also gauges how you spend your money too. You know, it tells people I'm maxing everything out. Yeah. Obviously with investors, me primarily myself, we always max out credit lines.
Yeah.
We have to sometimes.
So it hurts our credit, right?
Score. I mean, especially when your lines of credit go above 35%. It definitely hurts your credit a lot.
You know what I'm always scared of is so like I have like different credit cards, and like there's one time when like I didn't make it's like a $15 like payment, like I wasn't aware of it somehow, and then went into like $15, right? And then it's like, okay, now I missed a payment or whatever, like went to like 30 days, 60 days, 90 days, and so like there's a huge ding on my credit because like this silly little $15 payment that like I was not even aware of, like because you have like subscriptions, right? You have Netflix, you got Amazon, one of these different things, and so like, but somehow I missed this thing on one of like my credit cards, or not a credit card, it was like a vendor, right? So like one of the vendors, and then so like I was like, oh man, like that's like my worst nightmare. Where it's like it's not like I can't pay it, but it's like it would like somehow like got lost in like the internet or the interwebs, you know?
Yeah.
So.
Oh yeah, I am super scared about that kind of stuff happening. I have all my stuff on auto pay too, and I look at all of my charges every single month just to make sure that they actually took it out of my credit card.
Another thing too is actually my identity got stolen recently too, and there's a guy who's been forging checks in my name, so I'd like go into my bank, taking out cash, all these different things, but I had to go through this big thing with the police, this identity fraud thing, and that's a whole other thing where like it can potentially wreck your credit, depending on. But like to me, it's like it's so unfair because like you're doing all the right things, right? But then, like your credit score is like negatively affected by something like this.
Yeah.
if we came to you with a sob story like that, what would your guys' thought process be on that? You know?
So if you're a repeat investor of ours, we definitely do a letter of explanation on why your credit went from a certain point to what it is now. And we do make exceptions for repeat borrowers. But if you're a newer borrower, we may ask why your score is lower than it should be. And we might give you a higher rate, unless it's like super low where we like cannot just do it at all.
What's like the bare minimum? Like what's too low to be?
So I mean, I've actually gotten exceptions for like 640.
Okay.
I think that's the lowest one that I've actually got an exception on because they didn't have any
history.
They didn't really. Well, they didn't have any history and they didn't have any reason for why their credit score was where is that it was just
so how,
640.
But you just fought for the investor?
Because this particular borrower, he was newer, so he was a newer investor, but he owned a construction company.
Okay.
So he had a lot of projects that he did before for other people.
I see.
And so I was able to use that to get an approval.
I mean, that's really interesting to know, just because like as a borrower, right? Like knowing what buttons he can push, or like where can you go to bat for me, or where do I need to kind of like actually make myself better. There's one side where you have to get better as an investor, right? Like make sure your credit score, you keep maintaining it, you're paying all your bills in time, having like a low credit utilization ratio, etc. But also like where can I like negotiate with my lender? Hey, can you give me a break here or there? You know?
Yeah, absolutely. I think it's important to have that kind of partnerships, especially, you know, when you're trying to be successful in this industry. I think it's good to have the right partners.
Being like in like the lending world, you probably talk to a lot of other like hard money companies, like, and other originators. Have you ever seen like a massive like foreclosure or like something really bad where some guys were like they're super negative on a deal?
I feel like they don't talk about it. I feel like everybody just talks about the wins. I know that we have seen really bad foreclosures before within our company, but they kind of keep it to didn't really happen, so let's not talk about it. Because I think it's that painful. But I haven't really heard of some significant one happening, especially with other hard money lenders. I feel like they like to highlight the better things that are going on. But I do know that it happens a lot. There's a lot of people who, I mean, especially with newer investors, maybe they took on a project that was a little bigger than they thought it was. So I always suggest, if people ask, you know, start with something smaller, you know, something that's not gonna be so over your head and, you know, a little bit more complicated than you can handle. And especially if you don't have any guidance on the project, you know, you're doing it all yourself and you're kind of just, you know, slapping things together. I definitely say, you know, try to stick to the smaller things.
Yeah, I think, actually, when you're just starting out, one of the best ways is just to partner with somebody in the very beginning.
Absolutely. 100%.
I mean, the thing is, like, let's say you find a great deal, like, it's like, typically when you're a new investor, you get into it because you want financial success or whatever it is. So you're like, oh, this is like a great deal. I don't want to give away any of like the equity to somebody else, right? But then if it's your first deal, if you partner with somebody, they can like look over your shoulder, making sure like your timelines are correct, your ARV is correct, your renovation is like reasonable, and kind of like walk you through some of the pitfalls. Like the downside is you're not going to get 100% of that deal, right? You're going to share probably 50% of the profit with your partner. Yeah. But at the same time, like kind of getting your like security and safety of it, and you probably get better rates with you guys as well too. Yeah. Then like it's just like a better introduction to the world of real estate. And then after you get maybe like one or two where it's successful and you've seen the process from end to end, like, okay, now let's jump into this myself and like take 100% of the profit, but also the 100% of the risk and responsibility.
Absolutely. So I also invest, and my first 3 properties I partnered. Okay. And it was not even really because of the money. Okay. Part of it was just because I didn't know what I was doing.
Are these fix and flips?
These are flips.
Okay.
Yeah. And
where were they?
They were in Washington State.
Okay.
Yeah.
Okay.
And then, so I didn't know what I was doing. I didn't have enough cash on hand. And so I partnered with the first, and what they wanted was 30% down on my first project.
Okay.
And I was like, okay. And then, at the time I was a single parent, so I didn't want to fall into the whole chaos and commitment, I should say, with just myself. So as I did the first 3 on my own, or with a partner.
Wait, let me just get this correct. So you're a single mom doing your first 3 fix and flips, like as a single mom, and like did you inherit money or like what?
No, I had a job working at an airline and I didn't have money.
Wow.
And so one of my girlfriends, she was flipping with her husband.
Okay.
And so they kind of inspired me to get into it as well. And, they obviously were paying their bills, and I was like, oh yeah, maybe I could do. And I actually learned to invest by accident. I bought my first house when I was 21.
Okay.
And then
how did you, was it here, where did you buy the house?
In Washington State.
Okay, because you're born and raised on Kauai.
Yeah.
And then how did you, it's really fascinating because number one, I didn't even know you were an investor too. I thought you were like a loan officer, but then you're an investor, you flip houses, and you house hack, and you also originated like $500 million worth of loans. Crazy. Yeah. Okay, continue. So.
Oh yeah, no worries. So at 21, I bought my first house. I think my first house was like $169,000
in Washington.
Yeah.
Okay.
And then I went to Home Depot classes, learned how to put in flooring. And then I took the cheapest carpet because the house that I bought was so ugly. But it was a house. And then I think like the following year, I found out that my value had increased on my house. And so I was like, oh, wow. Okay. So if I keep on doing this, I can actually, make money. So I kind of,
I think one of the challenges is like if you work at W-2, like there's just so much money you can make in a year because you're always trading your time for money, right? So like let's say like you work as at Home Depot and you make $50,000 a year, right? Then like the max you can make in the year after taxes and everything is like 30 grand, right? I mean maybe like 40, like depending. But then like when you own a house, let's say you buy it for 169, and then like later on it goes up in value to let's say 200. You just made like 30 grand by not really doing quote unquote anything, just paying your mortgage or paying like what you would pay towards rent, right?
Yep, exactly. Yeah, and so that's kind of how I got the green light. Like, oh my gosh, okay, I can actually make money off of real estate and and still work and support my kids.
Are you married at the time? You're single? What's like the?
I was single.
So a single mom at 21 bought a house by yourself.
By myself.
No help from parents or anything, or?
My mom helped a little bit.
Okay.
Yeah. My mom helped a little bit. I wanted to get out of her house because I had a little one. And then
so you're living with your mom at that point in time. So.
Yeah.
Okay.
Yeah. I was living with mom and I was like, I'm over this already. And so I bought a house, found out that I couldn't figure out how to pay my mortgage. So I started house hacking my house.
Wow. Okay.
Yeah. And so then I figured out how to pay my mortgage.
What's a house hack and what did you do?
A house hack is basically renting out your individual rooms.
Okay.
Yeah. So it was a 3-bedroom house. Me and my daughter shared a room.
Okay.
And then I rented out the 2 other bedrooms.
I love it. So like single mom, 21, you bought your first house in Washington for 169. You lived in one of the rooms and you rented out the other 2.
Yep.
What was your mortgage at that point in time?
My mortgage at that time was like $1,600.
Oh, $1,600? Okay, that seems high.
Yeah,
okay.
It was high. That's why I was like, okay, this airline job is not cutting it.
So $1,600, and then how much were you renting the rooms out for?
At that time it was like $600 a piece.
So $1,200 in rental rooms. So it brought down your mortgage to about $400 basically. So
yep.
Wow, amazing.
And then I was able to save money for my next project.
So first house hack, then how did you transition? What was like the next step?
So the next step was actually to upgrade. So I turned my house into a rental.
Okay.
And then I had enough money because I was house hacking to put a down payment on my second primary residence.
Okay. So and how many years later was that from the first one?
That was 3 years later.
Well, so house hack the first one. 3 years later, it's just saving money by house hacking. You have to buy your second house, and you're only 24 years old at this point in time.
Yep.
So 24-year-old single parent. I mean, like, no, if you're listening to this and you have no excuses, man. So like,
no,
okay.
yeah, no excuses. That's why I'm like, no, anybody can do it.
So your house hacking, so you bought your second primary residence.
Yep.
Was this in Washington too?
It was in Washington.
Okay.
This was when Washington's prices were just amazing.
Okay,
so.
and then what did you buy this guy for?
My next property was $330.
Okay, so kind of a big jump from the
Yeah,
169.
but there was more rooms.
Okay, okay, I love it.
There was four rooms in this house.
So when you're looking at shopping, you're planning to house hack this next one as well too. So when you left the other house, was it still rented out by the room?
No. I rented it out to a family.
Okay.
Yeah,
so
that they were able to cover my entire. I was actually cash flowing like $100 off of that house.
Okay. Because like the cool thing about real estate is over time the mortgage stays the same for the next 30 years, but inflation and rent goes up, right? So the value is going up while your mortgage is the same.
Yeah.
Do you still own that house today?
I don't.
Okay, just curious. But okay, so you bought this next one, $330,
Uh-huh.
and then there's 4 rooms this time.
4 rooms,
so
yeah.
to break it down for us.
So I rented out each room for I think $550 on this one because the location wasn't exactly the better location. I think my first house was better. And then my mortgage was on this one because I had saved up enough money to put down 20%. I was actually able to my payments I think was only like $1,800.
Okay.
So I actually started cash flowing on this property.
Wow.
Yeah. So I lived for free.
How many bathrooms were in the house?
There was 2.5 bathrooms.
Okay.
Yeah.
So how did you guys like sort out like the whole situation? It was like
we're all females, thankfully.
Okay.
And we kind of all had different schedules.
Okay.
So it worked out actually pretty good. And we were all worried about that at first.
How did you, was it Craigslist, Facebook? How did you find these roommates?
So back then it was Craigslist.
Okay.
Craigslist and yeah. So, but I feel like Craigslist was easier back then.
Yeah. No, I agree. I think like over time now Facebook has kind of taken over the Craigslist, but back then Craigslist was more popular.
Yeah.
So then who cleans the house? Who does the dishes? Do you guys ever get into arguments when you guys are house hacking?
No, we just kind of a lot of people just kind of stay to their own little areas, like their rooms and stuff like that. And most of the girls didn't cook. So I was the only one that cooked. So I was the only one that used the kitchen primarily. But bathrooms and stuff, we kind of all just picked up whenever it was.
So there was never any like you guys never make a checklist or whose week it was to clean the bathrooms or anything. It just it worked out pretty good. We're all still friends now, so this is crazy. Did they bring their boyfriends over or any like did they have kids or anything?
Nobody had kids except me at the time.
Okay.
Yeah, and then boyfriends and stuff. We didn't really have. We all kind of were like a group of just single girls. And
so there's no drama at all.
I hear about all the kind of drama with house hacking with other people, and I'm like, I was just blessed. Why do you,
just really curious, why do you think like was it luck? Was it like the house? What do you think?
Well, I interviewed a lot of people too.
Okay.
So I think
you did reject people who like you weren't a good fit.
Yeah. Who can I live with and who can I, who will be a better fit for us?
Because I think that's a big part of the process is whether you're finding like housemates or tenants for your rentals, that first interview process, you want to like make sure like you're very strict on the front end to find like the right tenant. If you have the right tenant, then like life is super easy. But if you have a tough tenant, then like your life can be very miserable.
Yeah, absolutely.
So how did you get into flipping houses from that point?
So my girlfriend and her husband were they started to, they were actually already into flipping.
Okay.
And I was working my airline job and I was like, okay, I need to like figure something else out. But like I didn't have any bills because my house was getting I was already cash flowing from my house. And so they started doing it, and so I went and partnered with them on the first 3 properties. And I think I only made like 15,000 or something
per or total
for each.
Okay.
Well, no, one of them I think I only made like 6,000.
Okay.
But for me it was better than nothing.
Yeah. And you're partnering too, right? So like they're probably doing a lot of the heavy lifting for you. Yeah.
I was kind of just overseeing. I didn't have much cash to contribute either. I mean, I went a third because there was 3 people. So I went a third in it. And then I didn't have to come in with a bigger down payment because I was already I piggybacked off of their real estate experience.
So they kind of they got better rates for like were you guys using hard money for there too?
We did use a hard money lender back then. Yeah.
So I mean, what was your role in the flipping partnership?
It was basically project manager.
Okay.
So I had to take care of overseeing the materials ordering, basically the contractors, subcontractors.
So you're working with the contractors in these projects.
Oh yeah, it's so fun.
Any challenges in that?
Yes, I think there's always challenges, especially when it's this particular group where they were used to working with my girlfriend and her husband.
Okay.
So there was times where it's like, well, no, we need to hear it from
the
them.
other.
I'm like, okay. So yeah, I think there is a little bit of pushback when you don't have your own team.
Do you ever feel like it's a kind of like the construction is more like a male dominated
Yes.
So was there some like things where as being a female to like kind of tell guys what to do, that was there any kind of pushback like that? There was.
Yeah, I feel like they're always gonna give their opinion because they're the specialists or they're the person who's trying to call the shots.
Yeah.
So there's definitely that kind of friction, I feel. But I feel like if you pick the right partners too, ones that kind of just listen and kind of go with what you're wanting, I definitely think that
it all comes down to like the right relationships, right? I feel like the vendors you use, like the team, either your team or the people you're partnering with, like it's night and day whether you have a great partner or like a terrible partner. It makes great experience or a terrible experience.
Oh yeah. I think contractors and partners can either make it very successful or make it terrible.
The thing is, like, it can be very successful financially, but then a headache on like the stress wise, right? Or I mean on the opposite side, it can be like very like negative, like financially, but very nice stress. I mean, depending on like on the person, right? So like but you want to find someone who's experienced on they're good at what they're doing and they're also easy to work with.
Yeah.
So
I currently flip properties in Alaska and Washington still.
Okay.
And so I have partners in both states.
How many flips do you typically do like in a year?
So that has kind of died down.
Okay.
So I was at about 3 flips a year,
Okay.
Considering I still have a W-2 job.
No, that's very, very impressive. I mean, and your job's pretty demanding too, so.
Yes. And so lately, I think my last flip was April. So I haven't touched anything since then.
Okay.
Yeah.
But I mean, like going back to your hard money, like origination, how have you been able to like, how much, like how big of volume do you average like every month in hard money loans?
So like in amount, I probably do about 25 loans a month, 25 to 30 loans a month.
Okay. And like, what is that, like 500,000? I mean, like
they vary. So I do a lot of smaller ground up construction. We lend in 45 different states.
Okay.
So the price range is all over the place because we also do DSCR loans and fix and flips in Missouri, which is a total different category.
Why 45 versus 50?
So there are some states that are very hardcore with their licensing, and I think that we just haven't been able to get the licensing for those states. I know that has been a problem. Like we just got Arizona, and I heard Arizona's hard with their licensing. How you get all of those. So
I see.
I was very happy that we started lending in Arizona.
So 20 to 25 projects. How many millions a month is that of origination?
Usually about 20 million.
20 million a month in originations. Yeah. Wow.
Yeah.
And that's just you, or is that like you have like a partner or a team, or it's?
So it's mainly me, but I do have an assistant that helps me too now.
Okay.
Yeah.
I mean, like you're doing a lot, so I mean, like I would assume like you would have like a small team or something with you guys.
Yeah.
But you have also
we're working on that.
You gotta ask the big boss.
Yeah. I think we're slowly getting to that point.
But it's so like on your company as a whole, like, do you know how many other loan officers or how many guys you guys
So
have?
Conventus, we have like about 20 loan officers now.
Okay.
Give or take, maybe 15 to 20, because we just got a couple of new ones. And we're a semi-small company. We're based out of San Francisco. And then we're kind of just scattered across the U.S. So, yeah.
Maybe like what's kind of like what makes your life easier as a lender or a loan originator? Like what kind of people do you like working with? What kind of products do you like selling?
Like you guys, like easy. I like people that are
what makes it easy?
Responsive. I mean, whenever we're doing a loan, it's very crucial with time frames. And there are a lot of borrowers out there that will get us information when they want to. So we do close loans pretty quick. I mean, in the state of Hawaii, we're averaging about 10 to 14 days.
10 to 14 days?
Yeah.
Really? Wow.
Yeah. But in other states, we can do as quick as 7 days.
Wow. Okay.
Hawaii is just a little bit more. They have a 2-day prior to funding prior to closing.
That's actually one thing that I like when I first started. I was like, why did this happen, right? So like, can you explain like what that 2-day?
I don't know why Hawaii does that. I have no idea. It's like the only state I work in that has a 2-day funding prior to close. And it messes everything up. And I don't know if it's like a review period on what Hawaii requires. But yeah, Hawaii is the only state that does require that.
Interesting. So I mean, basically the way that works is like, let's say our closing date is on October 30th. Then you have to have all the funds, the actual like physical money in by October 28th in order to close on the 30th.
Yeah.
And I mean, I just like, because when I heard, I was like, that doesn't make sense. I mean, like, we're closing on the 30th, but it's actually like, I don't know if it's a Hawaii law or whatever it is.
I think it is a law, yeah.
So, but it makes things like your timeline is, so if you're a new investor and you're not aware of that, you think like, as long as they get the money in by the 30th, we're good. But no.
Yeah, I always tell them to plan a week prior.
And it's also like 2 business days, right? So like if it falls on a weekend, now like Saturday and Sunday are or a holiday, like you're basically like those don't even count. So like if you're a Memorial Day or whatever it is, you have to get it in 5 days sooner in order to close on time.
Yes. So. Yeah, it's usually if I'm working with anyone, I usually try to push at least like 4 to 5 days to have the loan docs out prior, and then have funds in your bank account by 7 days prior to closing.
Yeah. Just because I mean, otherwise because we when I first started investing, like my timelines were off because I wasn't aware of this. And then like, I think they're just, I mean, like you don't know what you don't know, you know?
Yeah, exactly.
And honestly, it doesn't make any sense because even when I talk to investors from out of state, they're like, we don't have to deal with this. You're like, no. Just like a Hawaii thing.
Yeah. I don't know if that'll ever change and if it's been like that, but it has been in the last, 4 years that I've been around.
But so being responsive is helpful for you guys. Yeah. What else do you guys like?
Being responsive, we don't ask for a lot of documentation. So usually we ask for just driver's license. If you're using an LLC, your LLC documents. We usually ask for like your last month of bank statements. So it's very and being we do require a scope of work to be filled out. So being very detailed about your scope of work.
Who actually looks at the scope of work?
Our credit team does when they're trying to factor in the value of the ARV. So we do an appraisal that will give you an ARV.
So you guys do an appraisal at the property with like a licensed appraiser. Okay.
Yeah. And that's mainly done just so that we know for our security and our investment that the ARV is going to be what we think it's going to be.
Do you guys ever do like a desktop appraisal or desktop ARVs?
Yes. So we do drive-by BPOs as well.
Okay.
Usually it's for the ones that are in foreclosure and we don't have access to these properties. So like the tenants don't know that, we need to get in or whatnot or what's going on. or if it's a loan that we have to close really quick.
Okay.
The only time though we'll approve a drive-by is with an experienced borrower.
Okay.
Yeah. If
so like a new investor, like they wouldn't get the drive-bys.
No.
But if you're an experienced investor, like depending on the situation, you get approved for a drive-by.
Yes. The only time an investor will get approved for a drive-by if it's on auction and there's no access inside.
I see. Or like there's like a very quick timeline or something on those lines.
Yeah. Well, with new investors, we can't even close.
Yeah.
With
But I mean, like, let's say an experienced investor, like, because let's say there's like whatever, like a tricky situation where you need to close like in 7 or 10 days or something.
Yeah.
And then to schedule the appraiser out will take a long time, etc. And so,
yeah.
But it's helpful to know that there is actually leeway with you guys, where you guys are able to like negotiate depending on the situation, you know?
Yeah.
So.
Yeah, absolutely.
So, I mean, I wasn't actually aware of that, so that's good for me to know. So, but I mean, it's just so interesting to like just hear from like your perspective and things like, you know. And so, what's important to you guys as a lending perspective?
Yeah, I for me, it's just responsiveness and getting documents as quick as possible, so that because it's hard when we have to ask like 10 times, and then all of a sudden the day before closing it's like, Tam, where's my loan docs? And I'm like, well, we've been asking for these documents like for the last 2 weeks. So yeah, just getting documents in time so that we can get your loan closed as soon as we can.
It's funny. So I hear both sides of the story, because I know like we've had experiences where we're asking our loan officer, hey, can we get documents? Can we like get information? They're like, I got it. And they're like, don't hear them for like 2 weeks. Hey, any info? And then at the last minute, they're like, hey, we need all this stuff, right? And so like it's just like on that side. But also I've heard a lot of investors, I know sometimes you guys work with, they're like, hey, can we have this information? Then they ghost you for 2 weeks. Then, hey, we need all that. Where's our loan? But like, you're like, hey, I've been asking for this information. If you can't give me this information, we can't move the process forward.
Yeah.
I think it's always like I think a good analogy someone told me is you always want to think about playing ping pong.
Yeah.
So like you always want to put the ball in the other guy's court. So you never want to have the ball. You want to have the ball in your court as a short time as possible. So whenever somebody asks for something from you, do it and then send it back to the other guy. So you're always waiting on the other person as opposed to waiting for yourself.
Yeah. Yeah.
But I mean, that's good to know. Okay. So any other things that makes a good borrower or investor?
I mean, honestly, in a perfect world, it's being nice, I guess, because our team works really hard. My team at Conventus, we have tight timelines. I'm all about customer service. And so we are very responsive, because if my team doesn't respond to an email right away, I'm usually like, oh my gosh, okay, come on, like we need to get back to them. So I think in a sense, just the same respect as well. Because we get a lot of people who like will just yell at us, and I'm like, why do we have to be like this? But because we all have the same thing in mind, is to close the loan. That's all what we're trying to do, and delaying the loan is not what we want at all, if we can avoid it.
I mean, I think it's good to realize we're on the same team. A lot of times, sometimes you're with your loan officer or like your investor, you feel like you're fighting against each other, where you're like, you're not, you're just like, it's like you versus them, like, a lot of times. But like, just knowing that we're on the same team, we're trying to work through this thing together. And honestly, like as investors, we're not always gonna be perfect. And we have to realize, as loan officers or as a loan company, you guys are not always gonna be perfect too, right?
Exactly.
You guys are gonna make mistakes. We're gonna make mistakes, and just having the grace and like to be able to kind of push the ball down the field, even though that there's gonna be mistakes along the way.
Absolutely. Yeah. I mean, there's times where it's like on a Friday and we're closing like 4 different loans on that day. That we might miss an email, or we might miss that you already sent us the scope of work and we're asking for it again. And it's not, it's just to kind of cross that T and dot that I, that everything was made, and sometimes we just don't see it come through. And we have to ask again. So we're all just trying to work together as quick as possible, and we understand that things do happen.
And sometimes these are like high stress situations, right?
Oh, yeah.
Both for the investor, because I mean, we have like a lot of like money in the line, like we have deadlines, we have people yelling down our back, like, hey, where's like my loan, where's like I need to close whatever. And then you guys have our investors like, hey, where's my loan? Like everybody's yelling, everybody like, I need this thing. And it's always like, I need it yesterday, right? It's like, it's always like, it's never like, take your time. Like, no, like we need our money or we need to have these documents for SAP. And so it's such a fast paced industry or like thing that's like, it's always going to like naturally just have a lot of stress.
Yeah. Well, and I think coming from an investor standpoint, from being an investor myself, I understand how crucial things are. And so, there's a lot of people in the loan industry that may not pay attention to closing dates as much as we do, like as the loan officers. Like there's our credit team and, they might have, 10 loans to review, so they might not prioritize. So it's just communicating with our inner team saying, hey, this is a priority. This one is going to close quicker. We kind of need this one done already. And just putting everybody on the same page.
That's one thing I noticed about like a great, I guess, loan officer. I think like the loan officer makes a big difference in like the experience because the credit team or the people who are the underwriting team, like they're probably like more 9 to 5, right? Like they show up to work, they punch in their clock. Like they don't really care how many loans they get. Like there's no like they're just doing like their 9 to 5 job, right? And so if they take longer, like they don't really care. It's usually like the loan officer who's like the relationship management that they're doing. Like I need to keep my borrowers happy. They're the ones kind of going back to like, hey, like can we speed this up to like the credit team or whatever? Like what's the hold up, etc. Or like when like, hey, we're not gonna approve this. Why? Can you like give me an exception or can you like because here's the situation. But then if your loan officer is kind of like more laissez-faire and like they're not pushing, that's where I see like if the loan officer doesn't care, then like that's when things don't, or they don't have pull because sometimes like they care but like the credit team won't listen to them because they don't have enough experience or pull. So like there's like the combination of different things is whether it's your company or like another hard money company, the loan officer makes such a huge difference in the experience and like of the borrower.
Oh yeah, absolutely. There's a lot of times where, I have a processor and so forth, but there's a lot of times where I will kind of just, hey,
jump in
what else can we do? Like, do we need to provide more comps? Do we, what can we do to make this easier for the borrower and close this loan on time? Because you run into so many different scenarios and humps. I mean, just like anything else. And, sometimes the appraiser is not agreeing to what the ARV we feel is, and so we need to kind of, go through that and give options to the borrowers so that they're aware of what's going on.
I mean, that's really, really helpful to hear and to see what you guys are looking for. What makes, so on the converse side, what makes a bad borrower or a bad experience for you guys? I mean, so we talked about no communication, right? Let's say like they get angry and they yell at you guys a lot. Like what else would be like a bad experience for you?
Mainly that. I mean, mainly just communication and maybe I think communication is everything because even when you're communicating things over to them or explaining things, it might get lost into translation and, they come back and ask more questions on why you didn't tell them. So I think communication overall is a key to any relationship really. And I thankfully I don't experience a whole lot of bad borrowers. Because if that's the case, I just here you can have him. I just refuse to work with people that don't have the same respect.
You're in a good spot right now because you had some success. Now you can choose to like kind of pick like your clients, right? And when you're first starting, you just have to like take whatever you can get. I think this applies both for like let's say deals, for PMLs, whether it's your hard money lender or whatever it is. Just because like when you're first starting, you just have to take what you can get because you don't have options. But once you have some momentum, you had a little track record, now you can dictate like, okay, this guy's just not worth my time. That he's a headache. Even though he's going to like borrow like millions of dollars, I don't want to deal with him. You can actually pass him off to somebody else.
Yeah, I think it's definitely better to have a better relationship with the people that you work with because overall it is your mental health that's going to matter at the end of the day.
So, I mean, what are kind of your goals as a loan officer? Where do you see yourself in the next 2, 3, 5 years? What do you want to accomplish?
I ask myself this thing all the time because I enjoy my job. I enjoy the people that I work with. I enjoy doing what I do. and I think my main goal as a person is to hopefully retire early. But other than that, it's just to help as many people as I can. You know, I mean, I've been there before where I was a struggling investor, and so I understand, and I know I understand a lot of people's hesitation as well. And so my goal is just to get people to where they want to be.
You know, I mean, this is like, I guess, a question I always ask myself too, is because like you see like everything that's involved in like the flipping and the things. Maybe what's like, why not just go full time into investing yourself? You know, like what? Because I mean, like, but obviously you see like the best and the worst, right? Because there's like you've seen all like the successful people, and you also you've seen there's some train wrecks too, right? So I mean, like.
So I do like my goal right now as an investor is to buy and hold right now. Okay. But my issue is finding the deals that I really want to put effort into. And so I kind of toggle between, you know, why not just become an investor full time again? And, you know, but I love what I do right now in the period of my life. So I used to be investing all the time. And I think it can be a little more hands-on.
I mean, it's definitely like stressful and it's overwhelming, and there's pros and cons to both sides. And so I definitely can see the pros and cons. Just kind of curious in like your thought process through it all, you know. So that's
I think my last project kind of scared me.
Did you guys make money or did you guys lose money?
So we actually did a flip in Anchorage, Alaska, and it literally took 11 months and 2 weeks because we worked with a contractor that took off with our money.
Wow. Okay. That sucks.
2, it was in the middle of winter, so all our pipes froze and burst. There was just so many downfalls to this particular project that I think overall it made me go a little crazy and was like, okay, you know, I know that there's always going to be a better one and you always have to experience those bad ones. But I think I have PTSD on that one. So I told myself I was going to take a break and look for just a buy and hold. But that was a scary one. But 11 months and 12 weeks just before our loan matured.
Wow. So I mean, like years of cutting it close.
Yes.
I mean,
and we spent a lot of money on this project because the contractor that we hired took off like $25,000 of ours, and I think the initial rehab was supposed to be $60,000.
Okay.
And because they took out, we spent close to $100,000. Wow. Instead of the $60,000.
Did you guys end up losing money in this guy?
We walked away with I made $3,000.
Okay, I mean, like a win's a win. I mean, like as long as you guys are positive. I mean, so
we were right there with losing. But I thought we were gonna lose money if we hadn't sold the house as quick as we did. And it matured, then we would have been under.
That's the thing about investing though, is like it's such a wild ride because like we have these projects where like so easy, like, you know, like you finish in like 3 or 4 months and you make a lot of money, like, oh wow, like this is like life is so good. Then you have these like 12-month, 18-month, 24-month projects that are just sucking the life out of you. And you lose like 6 figures on it. I'm like, it's like, why am I putting myself through this stress?
Yeah,
like,
why did I do all of this for this? Yeah.
But I mean, it is a wild ride. But I mean, we enjoy it at the same time. But it's just it does take like the ability to handle stress is like one of the big things I think as an investor, but also as a loan officer, right? Like that. How did you like? Is there any special tips you have or techniques you have to handle like the stress?
Take breaks, take a lot of breaks, handle stress. I think it's, for me, what I've started doing is just picking better people that I want to work with, that I feel that the partnership and the relationship is there. And try not to let everything bother you. I mean, yes, it's a very high stress type of industry, or it can be, I should say, but I think it's all about how you maneuver with it. And if you allow everything to drive you crazy, it will.
Like, I mean, you just like a lot of it is perspective, right? Like you have to make sure, like, okay, this person just yelled at me. Take 10 seconds and like just let myself breathe.
Yep.
Like process.
It will be okay.
But I mean, like that's I mean, because I don't know about like the like from your perspective, but from our perspective, you always have like a very happy and very like pleasant demeanor. Like, you know, you seem like a very positive, upbeat person. So I can't imagine you getting angry or like, you know, being upset. I mean, I'm sure it must happen, but it just like from our perspective, like you have a really good handle on everything.
I think it's important to keep a positive mind, because once you start swaying away and you think about the negative things, then it starts taking you down.
Yeah.
So for me, I just if it's something that's like totally, well, you guys are easy too. Like, you guys are so nice, and you literally give me everything when I need it. So
shout out. I mean, so here's a big, I mean, I'm so thankful for our team, because
yeah,
our Amanda, like our team,
oh my gosh,
she's amazing. Like the thing is, honestly, if you were working with just me, you would hate working with me. I'll be honest. Like I'm very bad at like getting back to. There's just, I mean, as an investor, like there's just so many things on your mind, right? Like you're trying to raise money, you're trying to like talk to the contractor, you're trying to like negotiate with the seller. There's all these things. So then like sometimes like the lender or like the loan officer kind of gets left behind, because you're not the loudest voice or the most priority. But like, you know, like now that we have Amanda, like she's just like amazing, like getting things that you need like ASAP. And so like if it wasn't for her, you probably would not work with us anymore.
Oh yeah. She is amazing. And she's so quick, and like she just provides everything. And so it makes my job way easier to be able to get everything done on my end. But yeah, I think just keeping the positive thoughts, and you know, like I said, I cannot even express like communication. You know, just, hey, did you get this? What do you need from me? You know, and yeah, I think that's probably the most important thing out of everything.
Amazing. Well, last question for you. If you could just like leave one piece of advice for like a new investor or maybe a new loan officer or something like along those lines, what kind of advice would you give to somebody?
Just do it. Like, I think people get too comfortable and they hesitate to do things that that you know could be amazing for them. But if you don't try these things and you let it, you know, hold you back, then you'll never know what the outcome will be. So I definitely say just, you know, don't hold yourself back from anything.
Amazing. Well, thank you so much for your time, Tam. If people want to reach out to you or find more about you, what's the best place to do it?
Email tamberyne@cvlending.com.
Thank you so much for having me on. Always a joy to work with. And yeah, thank you, Tam.
Thank you.